This is Climate Watch. I'm Zhao Ying. Welcome to the show. China has taken a major step toward improving corporate climate transparency. Recently, China's Ministry of Finance, alongside the central bank and several other regulators, released a new national corporate climate reporting standard titled Corporate Sustainable Disclosure Standard No. 1 Climate Trial. This marks a significant shift in China's ESG reporting system. In recent years, many Chinese firms have disclosed climate data on a voluntary basis. The new document now provides a clearer, more structured framework for climate disclosure. The Finance Ministry said the standard aims to direct investment toward genuinely green projects, curb greenwashing, and serves as a key policy tool for China's low-carbon transition. While the standard is currently positioned as a trial document and applied initially as voluntary, the ministry said it will expand its scope over time, covering more companies and eventually becoming mandatory. The framework closely follows IFRS S2, the global climate disclosure standard developed by the International Sustainability Standard Board. It is built around 4 pillars: governance, strategy, risk and opportunity management, and metrics and targets. However, the Chinese standard goes a step further by requiring companies to disclose the climate-related impact of their business activities. So what is driving China to strengthen climate transparency now? How should businesses and investors respond? And could China's approach influence the future direction of global climate reporting standards? I spoke with Allan Xie, Deloitte China's climate and sustainability leader. We had a conversation on the sidelines of the 2026 International Conference on Sustainable Development of Energy Economics. Special thanks to the School of Journalism and Communication at Tsinghua University, which co-chaired the event. Allan, it's great to have you on our show.
Hi, nice to meet you.
Explain to us a little bit this document, like what this new standard is really about and how significant it is.
This document is not a standalone one, and this is the first climate-specific standard that turned the general framework into something companies can actually apply. In China's style dual carbon 1+ policy system, it works as a basic enabling tool that translating national climate goals into company-level information that can be reported, measured, and compared. It matters because it is not about whether companies disclose, but how they can disclose using one common language that can be used by regulators, banks, and supply chains.
Yeah, and the standard is set to align with global climate reporting norms, but it also goes further by asking companies to disclose their climate-related impacts. Why is that important?
Yeah, at the international level, China's climate disclosure standard is largely aligned with SSB, the international standard, where the starting point is financial materiality. That means that how climate affects companies' financial performance. On that basis, China introduced the idea of double materiality, looking not only at the how climate affects companies, but also at how companies impact the climate. The key point is that these two are not separate. In practice, a company's climate impact often turns into financial risk through policy, regulation, and financing. So that is why a climate disclosure in China is not only for investors, but also serves national climate governance goals and a broader group of stakeholders.
Okay, so as you said, most global standards focus on how climate change affects company profits, but China now asks how companies affect the climate. But there are concerns that this may dilute investor-focused decision-making. Would you agree with that? Or does it actually reveal the risks that purely financial thinking can not yet see?
We can see that the financial implication is very important, but not everything. That means that we can leverage the financial investors, decision makers, and to improve the disclosure and also to improve the ESG performance. And also we can let the investors or the potential investors understand the risks and the opportunities of the company. But on the other hand, we can see the company's implication to climate is also a very key factor for example, for the regulator, for the stakeholders. So this kind of implication should also be paid more attention from the different stakeholders. So we don't think it's a kind of dilute. It's we can take it as a kind of supplement information.
Yeah, so China is essentially saying that climate disclosure is not just for investors, but for the society and various stakeholders, right? And it should serve the society and national goals, not just capital markets.
Yeah, capital market is very important. You know that can lead the money, lead the funding to the right industry, to the right area, and try to generate profits. But we can also see that this kind of information is also useful for the other stakeholders, and they can make, for example, they can try to improve the real situation, the real policy, and also it can be useful for the government to think about how to set up the long-term decision making mechanism and how to optimize the policy system.
Yeah, and earlier you mentioned the ESG. I believe many listeners are quite familiar with this, but how is this new climate disclosure standard related to ESG, or how is it different?
Yeah, actually, traditional ESG covers a wide range of topics and indicators. So climate is one of them, but linked to financial disclosure is often relatively indirect. So the climate disclosure standard can be seen as taking the climate part of ESG and turning it into more focused and financial relevant disclosure system. So a key difference is the structure. It follows the four pillars: governance, strategy, risk management, and the metrics and targets. So rather than a long list of standalone indicators. So this shifts climate information from being just an ESG score item to something that connects directly with the business strategy and risk management. And also the mechanism to manage the climate change risk can be a kind of pilot for the other ESG topics.
Yeah, and the standard is described as a tool to translate China's dual carbon goal from a national strategy into corporate action. But in your experience, does disclosure actually change corporate behavior, or does it mostly document what companies are already doing?
Whether the disclosure changes behavior depends on whether the information is actually used in decision making, not just a report. So in China, once climate disclosure is linked to the bank lending, regulatory oversight, market expectations, and access to the market, so companies tend to respond quickly. So this standard embeds climate issues into four core management areas, as I said, governance, risk management, something like that. So when companies are required to explain this clearly, it pushes real internal changes. The data system getting connected, so the actually the transition plan entering budgets and investment decision, and the climate targets becoming part of the management accountability. So at that point, climate disclosure is no longer just a record of past actions. It becomes information that is actually used by the banks, investors, regulators. So that must change the behavior of the company. Yeah.
Yeah, but we know that right now the standard is voluntary. So based on China's past experience, how seriously will companies really treat these kind of voluntary disclosures?
Yeah, although the standard is voluntary at this stage, it took a much more serious by the listed companies, export-oriented firms, and companies that rely heavily on financing. So we can also see that these companies have done a lot in the past to upgrade their management system and to collect more information, more data, and also they paid a lot of information on their ESG ratings, the credit ratings. So all of this, we can see that generate a lot of pressure on the company. So first of all, I can say this is a transition period for this company or for the regulators to change the requirement to the mandate one at last. Secondly, I think the pressure from the customers, from the supply chain and from the investors, different stakeholders, they have more expectation on these companies, and also they can feel the peer pressure from the other competitors. So this can also turn the requirement into a kind of mandatory status.
Do you believe customers will also play a role?
Yeah, of course. Yeah. For example, when the customer have very high expectation on the disclosure of the product carbon footprint, and they will actually have the impact to the manufacturing company. But for this kind of carbon footprint data, is not only coming from the one company, they're coming from the whole supply chain. So the manufacturing company will ask for this kind of information from their vendors and their vendors upstream. So we can see they will transfer this kind of requirement to the upstream supply chain or the vendors. Then the customer will impact the whole value chain.
Okay, but just how prepared are Chinese companies in general to produce this kind of climate data?
The standard did not start from scratch. Before it was issued, both companies and financial institutions in China had already built some foundations for the climate disclosure. On the company side, this includes, for example, the Hong Kong listed companies, large SOEs, companies covered by the national carbon market, and also the export-oriented firms. Many of them faced early compliance or market pressure. They have actually done a lot to prepare such kind of data. Some companies, including the financial institutions, they had already disclosed climate information in line with some global framework, for example, TCFD. So I can say that they have a lot of framework and data on hand, and they are well prepared. But for this framework, I think the key point is that it can integrate all of these different requirements into one more complicated and more comprehensive one. And so for the companies, if they want to comply with all of these requirements, of course, they need to do more. Yeah.
Yeah, and the standard promises industry-specific guidelines for high-emission sectors like steel, coal, power, and cement. Which sectors do you think will perhaps feel the biggest immediate pressure?
Yeah, actually, for high emission sectors, the real pressure does not come from disclosure itself, but from the broader decarbonization environment they are already facing. They need to find the right direction, the right technology to invest, and see how to balance the cost and benefit. And also they need to think about how to balance the short-term and the long-term benefit and the cost. So when they really think about all of these things, the new requirements actually give them a guideline to report and to communicate all of this information and data to the stakeholders. So I can say that for the industrial specific guideline, it's not kind of pressure. It's a kind of toolkit for these high emission companies. And they can use this kind of specific guideline to formalize their data. And also they can use this as a kind of direction for them to invest or to verify their information.
And also, this roadmap explicitly mentions expanding from large firms to small and medium-sized enterprises. But what challenges or opportunities do you believe this create for smaller companies?
Actually, it is not easy for everyone. even for big companies, they need to do a lot, not just by themselves, but also in the whole ecosystem. But also we can see for large companies, they are playing a very important, leadership role in the ecosystem. For example, they will set up some kind of standard, some kind of framework. So for SMEs, I think they are not fighting by themselves. They work with the whole ecosystem, with different data platform, something like that. So I think for the SMEs, they should follow these trends and work with the whole ecosystem, especially the industry, the sector leaders.
What happens to SMEs in high emitting sectors that maybe cannot afford consultants, auditors, or digital reporting systems?
Yeah. We can say that for this SMEs, we don't expect that they will hire, each of them will hire consultant auditors to do a lot of things. I think for the SMEs, the key for them is to select the right direction, the right product, right trail for them. So at the same time, they need to think about how to invest and generate the reasonable return in a reasonable time period. So if they can then so, I think they have the basis to disclose this kind of information. And also the climate disclosure for SMEs relies much more on system level support, such as shared platforms, standardized tools, and the industry or industrial park mechanism. So in practice, many SMEs will participate through supply chains, leading firms, or industrial clusters rather than acting independently. So under the emerging disclosure framework, there will be also a phased implementation and certain exceptions rather than a one-size-fits-all approach. So the overall direction is gradual adoption. So balancing companies' needs with the reality of SMEs' capabilities.
Okay, and by the way, you mentioned the industrial parks. So do you think it will be helpful for these smaller companies to participate in these low carbon industrial parks that will help them to like better decarbonize themselves?
Of course, yeah. For example, in the industrial park, they can have a more, more efficient infrastructure, not only providing renewable energy, more, circular economy compliance framework, but also they can generate a lot of basic data. For example, the carbon emission, the energy utilization, something like that. And also they can leverage the greener infrastructure to improve their performance.
Okay, and another stated goal is to curb greenwashing. But in practice, does standardized disclosure actually do that, or does it just make greenwashing more sophisticated?
First of all, I think we can say that greenwashing is a bad word, right? And this kind of, the misleading for the stakeholders. But on the other hand, we can say that at least the company think their ESG performance is very important to the public or to their customers or to the other stakeholders. So at least they think it important, but they want to do it in a easy and cheap way, right? So I think the key is how to let them know the benefit and the cost. For this kind of standards and document, they raise the cost of the greenwashing. If they just say something that they cannot do, then based on this standard and also based on some best practice, it is easy to find out that they are not. So first of all, I think the standard can be used as a ruler for this kind of company, and we have the standard. On the other hand, we can see this can be also treated as a guideline for someone that they want to do something. I think for some company, they did something greenwashing. They may not really want to do that. Maybe they just don't know how to do that. So I think this standard can raise the cost for greenwashing, but on the other hand, this can provide a kind of tools and guideline for the company that they want to improve.
Okay. And for the investors, do you expect this standard to improve the flow of capital toward those genuinely low carbon projects in China?
Yeah, I think so. First of all, I think for the investors, they want to have more information, transparent and high quality. So this standard can, I think, can definitely be helpful. And also for the investors, they need to balance the return, the risk, and the opportunities. So for this standard, this can demonstrate all of these things. And for the decision maker, for the investors, they can have more, data information that can be compared, can be measured. And then when they want to make decision, and they can utilize this kind of information. Yeah.
Yeah, but have you already seen such kind of trend in recent years that investors would prefer to invest in some low carbon industries or areas?
We can see some real case for the investing targets. If they have the same or similar financial situation, and for the investors, they will have the intention to invest on a greener business. It's not just the kind of expectation. This is about the risk and the long-term return. If you have greener business, that means that you can have a brighter future, and also you can have lower risk based on the fast changing environment.
Yes, and for global supply chains, if you think Apple, Tesla, or those fashion brands reliant on Chinese manufacturing, what ripple effects could this standard have outside China's borders?
Yeah, it's interesting. I think in the past, we can see a lot of Chinese companies, they are in the global supply chain. They were facing big challenges and the pressures from their global clients. But currently, we can see some changes, some very positive changes. That means that they have the improvement on their own technology, on their own government. That means that they can reach or even exceed the global average level. And then, China's size is so big, especially the manufacturing companies. So I think China is also setting a new standard or practice for the whole supply chain or for the whole ecosystem. And for example, one of my global clients, they have the annual investigation on their China supply chain companies, and they have their requirements and standards to do so. And currently, we can see China has our own standards now. So for these global big companies, they must consider the China standards, the China requirements, and then they will also update or even improve their own requirements on the whole supply chain. So for the Chinese standard, that must, play a very important role to changing the whole supply chain, the whole world.
Yeah, so do you think China's approach may also influence how other developing countries think about climate disclosure?
Yeah, I think so. I can say that currently China is a pioneer in this area. That means that we are setting up our renewable energy network, and to set up our new ESG standards, the climate related disclosure requirement. So this can be achieved by a Chinese company. So why not for the other developing countries? But also, this is not easy because China invested a lot, and this is also in line with our national strategy. So for the other smaller developing country, they also need to think about their own national strategy and their, for example, their energy transformation strategy. But if they want to be, more competitive in the global market, they need to find their own way to do so. So I think China model must be a very, important example for them. Yeah.
Yeah, thank you, Allan. Thank you so much for joining us today.
Thank you.
And that wraps up this edition of Climate Watch. You can find more episodes on your favorite podcast platforms. Just search for Climate Watch and hit subscribe. Don't forget to leave us a quick review or share it with a friend. You can also email us at radio@cgtn.com with your questions or feedback. And stay updated on the latest climate stories with our Substack newsletter, Climate Choices. I'm Zhao Ying. Thank you so much for listening. See you next time.